market, but we are talking about markets, and Mr. Swarup Mohanty of Mirrae Asset is here with us to talk more about that. Mr. Mohanty, are you also observing at your fund house increased number of folios, new investors coming in? It's not about SIP number alone, but the sheer number of new players, retail investors, be it traders, retail investors coming into the market. Are your observations also in that direction? Because we seem to be getting some, indication that that's happening.
Yeah, Ajay, thank you for having me on the show. Yes, I completely agree with you. The last 3 months, though not at pre-COVID levels, but we've had a consistent inflow of new investors. Typically, we would add between 60 to 70,000 new folios in our organization pre-COVID times. But in this COVID times, we have been adding between 35 to 45,000 folios on an average on a monthly basis, which is very heartening to see. And look at it from our perspective is, most of our folios are still skewed towards equity. If we had a broader base of equity and debt, which we are trying to now, this could have been even better, is our view. But to answer your question, yes, the flow has been consistent, and this is non-SIP. The SIP continues to be where it is. Typically non-SIP, we've seen additions in all the months.
Right. Mr. Mohanty, how are you guys at Mirrae interacting with your top distributors and investor calls? What are the gist? How are you analyzing the environment? How are you keeping your investors with you right now? Because that's also a challenge when market becomes very volatile. Or do you think investors have got so matured that the risk of losing them is relatively low in this cycle?
Ajay, two parts to it, and I'll address them in both the parts. One is, of course, the partner side of the business and the investor side of the business. I think when the COVID started, it was an issue, and we would think that how will we, of course, these are the right times to go out and communicate much more because the need for talking is at a heightened level. People have lost money, and these are the times for asset managers to go out and give their views and show comfort in their ability of managing the investors' money in such sort of environments. So when we started off, clearly we didn't know how to approach it to this extent. But I must say that the external environment stepped up very quickly. And today, the kind of communication which is learning in this entire period, both from the digital format that we are talking in at this moment, to say get going on live, say in all the forums, whether it's YouTube Live, Facebook Live, there are so many avenues which have opened up. They were always there. But we were, I think, not using it to the extent that we have in this entire period. And I must give credit to the environment, which has also really woken up to this. And I really look forward to continuing this ease of communication post this environment. And that's been the best part of COVID. The biggest learning is this graduation to this digital way of communicating, which is so easy. And has kept us very intense in this last 3-4 months. And it's been good going so far, I must say. I mean, and people wanting to do more of it is been the best part.
Mr. Mohanty, how are you guys analyzing? Is it the smaller towns which are showing more promise in terms of new client additions or new customers or investors? Or is it the bigger towns which are showing the way it has been in the past? Give us some data. Where are the incremental flows coming from, and what kind of queries are you getting from towns? Because now we understand that in a digitally connected world, the curiosity of new investors is across the country now, not only dominated by the bigger cities.
Yeah, it's a good question. And put things in perspective, let's look at it in this way. At this moment, the industry is in a stunted sort of environment where we are accepting applications mostly in the digital format, right? And this is where the platforms that aid distributor inflow through partners come into play. The respective direct websites come into play, which enable investors to come directly as well as through partners come into play. There is no physical transaction at this moment. And that is, I think, the biggest upgrade of the mutual fund industry due to COVID. I think the share that used to come in from a city versus large versus small remains the same. We've not seen any change in that. Yes, the mode has shifted more to the digital side than the physical side. Not right to conclude on the process of physical, because the physical itself is stopped at this moment. But a lot of physical players have now graduated to the digital form of transacting, and that I believe will persist post-COVID. To give you a share of what is happening, yes, most of the applications still continue in the SIP format. I would have liked to see people benefiting from the fall in the market. And the sad part of COVID is that, the lump sum investor sort of stayed away, which was not right for us to see. We went and communicated, we highlighted that these are good levels for entries in the market. But unfortunately, the sad part of COVID will be, I think the Indian investor in equity in particular has missed some fantastic times to buy in, and which will be benefiting the SIP investors more than the lump sum investors. I personally felt the lump sum investors could have done better at those falls. And clearly we have to now reflect on the way we invest. We seem to be so comfortable at buying at market highs and just running away when markets go down. And these kind of opportunities do not come time and again. And people should not be coming back to the markets because of fear of missing out. And that's the last thing that should happen. But I'm sad to say that that is a possibility going forward.
Right. All right, Mr. Mohanty, always wonderful chatting with you. Thank you so much for your time. And I really hope that the way investor community as a whole is starting to understand the complex investing process, well, they'll become better investors. Thank you so much for your time.